Hi, and welcome to the Stockscores Market Minutes for July 11th, 2014. This week I want to talk about a very simple concept in chart reading, and that is determining whether the market is optimistic or pessimistic. It's important because how people judge information will depend very much on their mood. It's important to be able to read the market mood on a stock before buying it, because no matter how good the story, it is best to buy when there is a show of optimism. People will believe in the story. They will want to pay more for the stock over time when they are in a positive mood. It's very simple to see on a chart. Rising bottoms are a sign of optimism and falling tops are a sign of pessimism. So here we have a chart of Amazon, and you can see that it goes back about a year. And what I want you to notice is the fact that over here we had bottoms that were progressively higher over time. Well, eventually those rising bottoms switched to falling tops. You can see there's our first falling top, and then another and another. And more recently we've again switched to rising bottoms. And therefore we are now in an optimistic state where we were in a pessimistic state through that zone. Now, one of the ways that I try to help investors see whether a market is optimistic or pessimistic is with the Stockscores indicators. The sentiment stock score, which is the green line on the chart here, represents a number of different technical indicators, but basically if it is above 60, like it was through here, then you have optimism. And again, we have recently switched above 60, and now the market is breaking through some resistance from a rising bottom in a situation, in a time when there is optimism in the market. All right, let's get into this week's analysis. And when we look at a chart of the S&P 500, we see lots of optimism, steadily rising bottoms over time. And although there was some weakness this past week, in the big picture, you can see here on the weekly chart, it is relatively irrelevant. The weakness that we saw did nothing to break any upward trend lines. It's trading inside the range of last week. It really wasn't a bad week, although many investors were calling for the end of the bull market. Just doesn't support it in the chart. The TSX finished more or less flat from its open for the week, but again, rising bottoms here, and until that trend line is broken, we shouldn't be too worried. Now, the weakness this week is something to take note of. Don't say we should ignore it, but at this point, it does not include a major breakdown in the market. TSX Venture benefiting from an improving gold miner market, and mining in general is improving, and you can see that we're building rising bottoms, which is optimism on this chart. However, until we break through that red line of resistance, this market still has a little bit of a battle ahead of it. Treasuries had hit that downward trend line 2 weeks ago and fell lower. This past week we had a pretty good rally in treasuries, which means interest rates went lower again. And we're really fighting with these two trend lines right now. If the red downward trend line is broken, look for higher bond prices, lower interest rates. If the green line is broken, then look for lower bond prices and higher interest rates. And like I said, there's a real fight going on in the bond market right now. US dollar generally showing pessimism, but pretty much in a sideways range over the last 6 or 8 months. If that green line of support is broken, then expect the US dollar to move lower. Gold is building a rising bottom, you can see there on the chart, but it also has falling tops. So it's a neutral chart. However, given the trend into the what we call a pennant pattern is down, this is a slightly negative chart. With that said, over the last 5 weeks or so, we've had some pretty good strength in gold. And if it can break through that red line, and it's maybe a week or two away from doing that, then we will have an improving gold market. So the first step here is that we've built that rising bottom, and those of you who are into chart patterns will know that there is a head and shoulders bottom pattern building there. That is a positive, but it still has work to do. We don't want to get too excited until that red line is broken. Oil has been in a profit-taking mode. I discussed the likelihood of that over the past few weeks, given that oil had hit resistance. It has broken its upward trend line, which tells me that it's likely we will see more weakness ahead. Now, that doesn't mean that next week we won't get a little bit of a bounce back, because the selling this past week was pretty strong, but in the weeks ahead, I do expect that oil will move lower, ultimately staying in that long-term sideways trading range. A little bit of an uptick in the VIX last week, but nothing to get too worried about. It does not point to a major sell-off coming. It just points to some people taking a little bit of insurance as a little bit of doubt in the bull creeps into the hearts of investors. So, U.S. stocks, Canadian stocks, bullish on both time frames. Gold neutral on both time frames. Gold is at a critical point where it could break that pessimism that's been underway for over a year. Oil neutral long-term, bearish short-term. I do see the chance of more selling in the oil market. Last week's selling pressure has not hurt the market technically, and the trend remains up. However, the weakness does show a bit of doubt, so close monitoring for a break of trend is important. Gold is firming up, but still has work to do, and profit taking in oil is likely to continue. Well, that has been the Stockscores Market Minutes for July 11th, 2014. Have a great week in the market and trade well.